In addition to welcoming you, just like to let you know this is the fourth and last in a series of insurance webinars hosted by the Farmers Market Coalition with support from the USDA Risk Management Agency. As we know, farmers markets are in a unique position, being accountable not only to their farmers, but to their shoppers and their host communities. As they become more popular and more complex, organizational sustainability becomes more and more important. Protecting board members, employees, and volunteers of farmers markets and farmers markets associations is critical to the sustainability. In addition to addressing directors and officers insurance today, this webinar will also talk about how two state farmers market associations establish statewide farmers market liability policies for their member markets. And I'd like to start by introducing you to our moderator, Peter Kochenburger, Executive Director of Insurance Law Center and Director of Graduate Programs, University of Connecticut School of Law. And I'd like to turn it over to Peter.
Thank you very much, Drew, and good day, everyone. And today I think everyone is a Husky fan if you follow basketball, except perhaps people from Indiana. But that's the last I'll say on that. I also wanted to welcome you all to here. And as Drew said, we will two very different topics. First, directors a discussion on directors and officers insurance, which is I think the last in the discussions we've had over the last couple of months on different types of insurance. Directors and officers is often right. Many people think it's an unusual form of insurance for some people, but I think our panelists here will do an excellent job of explaining it. And then the second topic follows up as in a way on all the topics we had over this spring, winter, which is a discussion of several statewide insurance programs. And our purpose here is to demystify insurance, which I think we can do, explain why it's valuable in each context, and then maybe most important, how to shop for it as easily as possible and what resources are available. After the presentation, we'll have questions, and as Drew said, please type the questions in because the conference call, the audience members are on mute. We have three panelists, in order of speaking will be Melissa Kaufman, a certified insurance counselor and account manager at Jester Insurance Services.
Hello.
Jeff Cole, who is the executive director of Massachusetts Farmers Association and a founding board member. And Bill Otto, who is president of the Minnesota Farmers Market Association and has 22 years of farmers market experience in the Midwest. Directors and officers insurance, which you'll probably hear the term D&O for directors and officers. That's often how it's referred to. It insures a different type of risk. Much of the insurance we've talked about over the last this year has been involved with bodily injury, physical injury, property damage, the standard kind of risks that we think about when we also think about what can happen at a farmer's market or anywhere. And the liability policies and product liability policies that you may have heard about cover many of those risks. But farmers markets also have a different type of risk, as does every organization, even a nonprofit, and that is when people significantly or seriously disagree with management decisions, such as, and often this is employment related. So an employee of a farmer's market believes that he or she has been discriminated against improperly, or someone who wants to get into a farmer's market believes they've been improperly denied access. So there are claims that in our legal system can be brought against organizations that are not related to bodily injury or property damage. And for that, for this different kind of risk, you need a different type of insurance. And that is what D&O insurance attempts to do. And here are several examples.
Yep, this is where I think I take over.
Yes, Melissa, I think you take over here.
Yes. So why does an organization want to buy directors and officers liability insurance? Well, if someone was to sue your organization because they believe that you violated a duty of care towards the organization or did a wrongful act, this policy would provide defense end protection for a judgment in this type of situation. So in generic terms, this is a policy that provides coverage for the management decisions that the board or volunteers or the executive director or employees would make. And those decisions are what someone or something, some organization does not like and they're being sued for. So, there we go. Some examples of some possible claims could be maybe your organization decided that we're not going to let a certain type of vendor sell at our market. Maybe their semi-homemade product is not quite exactly what your market is looking for, or maybe you've had experience with them in the past that has caused some problems and you've decided, you know what, we just don't want to have this individual involved in our market any longer. And then they bring suit against you because of that decision. Maybe a market's not doing enough to bring in customers. Maybe they're not doing what they agreed to the vendors to bring in foot traffic to get some sales going for these vendors. Maybe there was a market had been in a location for some period of time and there was a disagreement between the landlord or the people that they were using the space from, and so they moved to a different location, and that affected the sales or of the vendors, and so the vendors decided that they wanted to maybe sue the organization for changing venues. Another one might be a failure to comply with a donor's intent. Maybe the market was given a gift of a grant or some type of monetary donation, and the donor intended for the farmer's market to do one thing with it, but the board of directors decided to do something else, and they were brought into a lawsuit to determine if they did their due diligence and doing what they were supposed to do with that money. And as Peter had mentioned earlier, employment practices can be also brought a part of a directors and officers liability policy, and that would involve an employee-employer relationship with the organization and wrongful acts of termination, discrimination, sexual harassment, that type of thing. So a nonprofit organization do not have a lot of extra funds lying around to pay for the cost of defending a lawsuit, let alone paying a large judgment. I don't know a lot of nonprofit organizations that just have a lot of extra cash laying in their funds to pay for these type of claims that are brought against them. Directors and officers policies are designed to protect those assets of the organization, and as you'll find out, they're there to help protect the assets of the members and the board of directors as well. Even unwarranted claims need to be defended. If an organization does not have the funds, then the board members could be held personally liable for their own defense and any judgments assessed to the judgment. I'm having a problem changing the screens here, guys. There we go. So a director could be held personally liable for the result of a claim that is brought against them if the organization does not have any money to defend that case. As I mentioned before, it only takes someone believing that you are hurt by a decision made by the board, and money will need to be there to help defend it. So are you going to have to do it personally, or will there be directors and officers liability insurance to help protect you for those damages? Can we go to the next screen? I'm not having it change for me.
One, Melissa? Oh.
Actually, if you could go to the next one, please. There you go. Thank you. So again, why are we going to buy directors and officers liability insurance? Well, because your greatest asset is your volunteers. The organization does not want to risk the personal asset of their services by not having the appropriate coverages in to defend them in the case of a judgment against them. And does your organization have enough financial strength to pay for that type of loss? Like I said, most organizations are lucky to have enough to keep themselves operating, let alone have extra money in the bank to help to defend and pay any type of judgments that they might be involved with. On the next screen, you'll see what to look for and how does the policy respond. You want to look at your policy when you're looking at a director's and officer's liability policy and see that there's a duty to defend clause in the form. And what does that mean? Well, that means that the insurance company will provide the defense for you if you're brought into a lawsuit. You don't have to go find your own attorneys to defend. The insurance company will find an attorney that's specialized in this area and will help to defend your organization. You also want to look for if there is a pay on behalf of your organization. And what this means is you don't have to pay for your defense costs up front. The insurance company will go ahead and start paying for them on your behalf, subject to your deductible, of course. But then they will pay it for you. You don't have to be reimbursed by the insurance company. So that is just a cash flow basis. So on the next screen, you'll see what else to look for and who is insured. Is it broad enough to cover everybody that you want to be covered under this policy? Does the insured include the organization and any of its subsidiaries? Does it include the directors and officers, the trustees, the employees, volunteers, members? Who do you want to be insured under this policy needs to be listed under the definition of who is an insured. And another important item, and maybe one of the more important items, is the defense costs. Are those defense costs included in the limit, or are they included outside of the limit? If you have $1 million liability policy and your defense costs $100,000, is the insurance going to pay only the $1 million and you're going to be stuck with another $100,000 of the defense costs? Or are they going to include the $1 million judgment and the $100,000 of defense costs outside of your limit, so they would pay a total of $1,100,000? You have to look at what you want to make sure that you have enough limit to provide your defense and your judgment. And sometimes it's just asking the question of, can this be changed from an in the limit policy to an outside the limit defense? And there may be no additional premium charge. It's just all you have to do is ask. On the last screen of mine, what is needed to get a quote? Well, most of the time an insurance company will want to see a copy of the organization's bylaws, a most recent financial statement, and a completed application. The applications range from some companies have a one-page application to others have 20 pages. It just depends on each individual company. So your insurance agent would have to help you out with that. And then if employment practices coverage is wanted, if you have employees, they may request a copy of your employee handbook or a copy of your employment application that needs to be completed when an individual is hired. Thank you.
Thank you, Melissa. Just a couple quick things to add to that excellent explanation. Melissa did a good job, of course, of laying out the various things an organization could be sued for. Now, the fact that you can be sued, many people, organizations can be sued for many things. Most of these suits are not easy to win. Companies have a right to run their businesses generally, and sometimes to make mistakes without legal liability, but not always. And more important, as Melissa pointed out, the cost of defending a suit, even if it's considered frivolous, can be very expensive, particularly in employment suits in some of these areas. So one of the benefits, even if you think you run a perfect organization, the fact is that there's still some liability as an organization, and the cost of defense, as Melissa talked about, is very important. Another thing which you would, your insurance agent would ask you about, but is important to list all prior claims. When you shop for insurance, if it's a new insurance company or a new agent, they need to know any existing claims or, serious threats of claims, because if they're not disclosed, they may not be covered in the policy, even if it was a complete accident, you just forgot about it. So it's important as part of their process of obtaining D&O insurance to acknowledge or discuss claims or threatened claims.
Yeah, usually on the application it will ask that question, and you have to warranty and sign off that you have answered it properly.
Okay. Thank you. And the next presenter now, who will talk a little about how this program, D&O program, has been implemented, is Jeff Cole. Go ahead, Jeff.
Thank you, Peter, and thank you for Melissa for setting this up. The FMC has worked to create a decent D&O policy that provides fairly extensive coverage at a reasonable cost. And let's see. And so the base rate for the coverage that we have established, if I recall accurately, is $350. And this coverage is limited to C3 organizations. If your organization is a not-for-profit, that's not a charitable not-for-profit, coverage is still available, but the coverage rates start at $1,500. And I'll make a note that that seems to be kind of a standard base premium. I know that Mass Farmers Markets, before we had access to the FMC policy, was starting off at the $1,500 level, even as a charitable organization. And I would like to take the opportunity to make sure that people understand that just because an organization is registered as a not-for-profit does not mean that it is a charitable organization. And a side note to that is apparently our Attorney General here in Massachusetts doesn't quite understand that, because she's having a lot of issues with the health insurance industry and those nonprofits, and she keeps on referring to them as charities and asking them to do things that are more appropriate for charities to do, but of course they're not charities, and some of them are resisting. So that's just a little side note of that's not just the average person who doesn't quite clearly understand the difference between not-for-profits and not-for-profit charities, evidently. So moving on. The FMC policy covers, it has a duty to defend. The coverage for that is outside the policy limit, so that's a good thing, we believe. The definition is very broadly defined in our policy. It includes employees and volunteers, and even temporary or leased employees. I'm sorry, I guess I'm going in the wrong direction here.
I think the next one was
here we go.
Practices liability. Yep.
All right. The employment practices liability is included in our policy, so that means that if there are issues relative to employment practices, there is coverage that's not necessarily always found in D&O policies. And personal injury and publisher's liability is also protection that's provided in our policy. So those are just some of the basic understandings that we wanted you to have, and as you saw in the first slide of this, there is more information available at the FMC website.
Thank you, Jeff. We're now going to switch gears and move from the discussion on directors and officers insurance to a discussion of several farmers markets insurance programs that are now in operation. And Jeff and Bill will talk about this. If you have questions about D&O, and I hope you do, then please just type them in and we'll address them at the end, but please, but we're not going to discuss more D&O issues, so whatever questions, unless you accept it, respond to your questions. So if you have any, please, over the next couple minutes, type them in, and in the meantime, we now go to, back to Jeff. Oh, go ahead.
Sorry, did I interrupt you, Peter?
Oh, I was just going to say that the links will be uploaded after the presentation, so audience members will then be able to go to this slide, I believe, and click on to actually get there. They can't do that yet.
All right, great. Thank you, Peter. So I'm going to start off with just some general information about creating a statewide insurance program. Basically, we've broken it down into 3 categories for you. One is research. We want you to understand what the insurance laws are in your state because it's important in terms of creating a program. And we're not looking for you to become legal experts in this matter, just to get a general lay of the land. And it's very important, of course, we think, to start off with the understanding that if there is a company operating in your state that is willing to write this type of insurance, it clearly doesn't make a lot of sense to do a lot of work in the next section, which is development and promotion, unless you actually can begin finding someone to work with you. And the third section is evaluation. So on research, some of the things that we think you should look at is, can you collect fees and generate revenues with an insurance program? There are a couple things to look at. Does the state allow member organizations to work with an insurance company to create a group policy? Or if not, will it allow you to create a policy that provides for additional insureds? And in that sense, can you collect a fee for providing that service? Are there existing options for markets? Perhaps your state is a state that writes policies for general liability at relatively low premium rates for individual markets, and we may not need to do the work to create a system. Always wise, we think, to look around you and see what other states are doing. And again, I've already said that an agent who is interested in developing a plan with you is a very critical element. They will provide a lot of resources and understanding to you that is more difficult to find on your own. So if you decide to move forward, what are some of the things to think about? Well, you want to understand what the policy that you're working with covers. Is it, besides general liability, does it have producer liability? That's coverage for people who are producing products. Typically value-added products in the farmers market scenario. Does it cover product liability? That means, does it cover if people get sick from eating a product that's sold at the market? Because trip and fall is the typical layman's terms for general liability, and those are fairly standard types of policies, but they do have exclusions, and there are exclusions to potentially pay attention to. One might be liquor liability, and another might be that the individual vendors at the market would be excluded from issuing a claim against that policy. For instance, let's say they were walking across market and fell in a hole and sprained their ankle or broke their ankle. You know, will this policy cover that or not? And of course, I've already begun to talk about whether the coverage is shared or in an aggregate sense, whether or not each individual market has its own limits, is something for you to understand and consider what the right direction in terms of cost and developing the program works on you in terms of the amount of effort involved. That leads directly to understanding who the policyholder is. And the policyholder is the organization, individual, what have you, that handles the claims. And handling a claim can be a fairly large amount of work. And if you have an individual policy list issued to each market, then each market would be handling their own claims. Whereas if you have a group plan where the markets are additional insured, then the holder of that group plan is going to be the agency that is tied to doing all the paperwork and all of the meeting with the claims representatives and so on to process a claim. Further, most of these policies are audited each year for their premium rates, and the policy holder is the folk who will have to open their books to the auditor to show whatever information they're looking for to create the new premium rate and go through the paperwork and process of making all that happen. It's not necessarily hugely burdensome, but it typically is going to be a couple hours a year doing that if you don't have any problems. And of course, as you work towards developing your own plan, you want to be able to understand whether the agent is able to help promote and educate and problem solve on your plan, or whether you as an organization are going to be left pretty much on your own to do those things. And on evaluation. One thing that we think that's important to do is look at how many claims may have happened in your state recently, and what was the cost to the group that had that claim. That will help you identify the coverage limits that might be most appropriate. You want to look at whether you have been doing this or not, whether there's been what I say running a lot of interference, that is whether there's been an awful lot of work paid to facilitating the process of insurance claiming or not. I mean, in some cases, there'll be a claim. It still may be for what most of us in the industry think is a fairly significant sum of money, $30,000. That's not a lot of money to many insurance companies, and they may just turn around and pay it right off of hand, and there's not a lot of paperwork, there's not a lot of time and effort involved. On the other hand, there may be lots of paperwork and lots of time involved in processing claims, and so evaluating that would be an important component of your evaluation. And are you able to remain competitive with your rates? And again, this relates to looking around what's going on around you in other states and within your state, and whether your plan is on the cutting edge of rates or not, and that all will, of course, impact on whether you're able to continue funding the program. And typically, I'm assuming that the funding would come from the people who purchase the policies. Now I'm going to jump right into the Massachusetts program, and hopefully some of what I've said will give you some more details that make a little more sense to you, perhaps. Our policy is general liability only. It does not have producer or product liability. The base coverage is $1 million. We have a $2 million aggregate. That is that we are our policy is a policy that provides for additional insureds. Each market does not have its own policy. And so we have felt the need to increase the total dollars available for issues. And so we have placed an umbrella of $5 million over the underlying coverage. We have a total of $7 million available to claims in the state of Massachusetts in any one given year. We work to lower our exposure by only covering markets for the dates, times, and specified locations that they operate in. This is frequently, or I say this is the case because frequently the property owner asks to be added to the policy as additional insured, and that's not an unreasonable request. But our opinion is if we just add a property owner on as an additional insured without any limitations, then since our policy runs for a whole year, that the coverage would be technically extended for the whole year regardless of whether the market was operating or not. And so we work to make sure that the coverage is very, very specifically limited so that on off-market days or during the off-season, there is no coverage provided to the property owner for you know, having helped run the farmer's market, so to speak. The cost to our organization is about $7,000 per year in premiums. We spend about 170 hours of staff time if there are no claims. That staff time is pretty much taken up with all the paperwork that we process for registering and issuing certificates, or working with the insurance company to issue certificates, and education and follow-up, problem resolution in the minor sense. If there is a claim, at least 10 to 15 hours of staff time is added to that number of hours for each claim, and that's not going to court. As we say, we haven't been to court yet, fortunately, and so we don't have a basis for giving you a very reasonable estimate of how much it might take. But Melissa, maybe you could chime in and throw in a wild or not so wild guess of what a typical a court case might cost in terms of time.
Well, of course, each state, time-wise, I'm not sure time. I'm not involved much with the time portion of it, but you know, of course, each state's a little different. I could give you a monetary cost that they estimate $60,000 to $90,000 for court costs, but I don't know the time amount.
Litigation is very expensive, as Melissa pointed out. Fortunately, in the United States, very few cases ever actually reach trial. The vast majority, probably 95% or more, are either settled before trial, and that's one of the roles of the insurance company, or the case is dismissed in some manner.
Right.
All right, great, thank you. So each participating market, we charge $410 to plus membership. Our membership costs currently are $100. Although we do provide, we have a new program where we are providing joint membership with FMC for that $100, so we hope it's a little bit better value, of course. For that premium rate, there is included in our coverage $5,000 of medical and dental expenses. These types of, this policy helps kind of bridge that gap of you know, not a real significant injury, and I believe essentially it's just a quick way for an insurance company to deal with some very minor incidences and pay for a simple claim of, hey, you know, I went to the doctor's and I had, you know, $50 worth of expenses, and I want you to cover it.
Most people have that same type of insurance on their auto and homeowners policies as well.
Sure. So moving forward, the basis of our premium, as I explained a while ago, if you're the policy holder, you're likely to be audited each year, and the insurance company wants to look at certain numbers, and they use those numbers to generate the next year's premium. In our policy, the vendor sales in the aggregate are a significant factor, probably the most significant factor in determining the cost of our policy. And I suspect that that's because, for the most part, the type of policy that is being asked to be provided by the insurance company is not something that they've had years and years and years and years and lots of experience with, and so they turn to something that might be a little bit more traditional, like insuring a supermarket or insuring farmer's roadside stand, or whatever the case may be, where the risks have been well laid out per dollar of sale. And so they ask us to provide that figure to them each year. And as many of you probably are in the same situation as farmers markets is in, that farmers won't give us their sales figures. And so we're required to estimate. And this is how we do it. We take the Farmers Market Nutrition Program sales, which is a hard number and is secure in terms of its figure. And we create a formula, and that formula basically is that we know that there are markets where the sales of nutrition program sales are 90% and others where they're 5% or less, and we say an average of that is 47%. And so we take the Farmers Market Nutrition Program dollars and divide that by 0.47, and that we generate that as our total sales figure estimate for the markets that are participating in the coupon program. And we are fortunate in Mass that the redemption of the nutrition program coupons are recorded by market. And so we are able to differentiate between the total sales in the state versus the markets that are seeking to be covered under our policy. Now, we go to great lengths to explain this process to the auditor, and I try to get their approval, or at least to have them include a note documenting the estimation process. And I do that because I'm not confident that if somehow the actual sales were ever compiled in the state of Massachusetts, that it would come up with the same figure. And in terms of avoiding a claim of misrepresentation and possible cancellation or refusal to pay on the policy, we want to be able to be sure that we have, within the audit, documented the process and have sort of a sign-off that people understand, that the insurance company understands that that's what we're doing, and as a result can't be accused of any kind of misrepresentation. Of course, it's nice to use the Farmers Market Nutrition Program figures because they're aggregate figures and they absolutely protect the privacy of any individual farmer. And with that, I believe that is the end of my presentation.
Peter, still there?
Oh, I'm sorry. I had it on mute because I was listening. Yes, we will go to Bill Otto now, who has 22 years of experience in farmers markets, and Bill will talk about the Minnesota's statewide insurance program.
Well, we developed this in the past year, so this is fairly new to us. We haven't had a year's experience here to see how everything went, but I worked with a couple of different companies trying to find a reasonable rate, and we came up with one here in central Minnesota. We wanted him to come up with a policy that would give us liability coverage for products and sales that would be in the $50 range. Well, we came close to it. We worked this out as I'm a board member of the Farmers Market Association here, so I was tasked with doing the research, and we spent many hours at that game. And I talked with 2 or 3 different companies, and we ended up dealing with one locally here. Let's see if I can change this. We have developed a fairly simple plan compared to what Jeff was saying there. The idea of total sales did come up, but it was disregarded. A lot of small vendors here in our markets, so we didn't get into the concept of how many sales, although I think this may come up in the future. What we've set up here is a group policy where the Minnesota Farmers Market Association is the owner of the policy, and all the local markets and the vendors are considered additions to the policy. Limits of liability would be $5,000 for the entire group. 5 million, and then $1 million per occurrence. And we can see the screen at $250 is a deductible per occurrence. And we set the policies so that they run from March to March. And our local agent here has the policy underwritten by Capital Specialty Insurance Corporation out of Madison, Wisconsin. In order for a member, a vendor, to obtain the insurance, the market at which they are members, the local markets, must be members of our association. Let's see if these numbers are right here. $70 fee, that's for our market, a local market, to join the association. What each vendor or producer would pay is only $65. If they are going to sell any kind of crafts, and that seemed to be a problem with the insurance company. that crafts presented more risk. So they upped that to $140 per year for a vendor. Oops, back here. In order to get the market insurance, which is the same kind of policy as any vendor would have, they had to be a member of MFMA, Minnesota. If they're going to sell crafts, it can't be a large mass-produced item. We're going to go with, home crafts and that sort of thing. And if there's any claims, the other insurances they're going to ask the other insurance to pay that first, and then these people Stearns Insurance would kick in. There's no difference in whether you have the policy half a year or a full year. The premiums are the flat numbers we read. There is a processing fee, and that's all part of the premium. Like I said, the insurance company is probably going to get $50, and the other money is processing and profit to the Minnesota Farmers Market Association. We have had a fairly good relationship with the insurance company, because our market association is making an ongoing effort to keep educating people as to safety, food safety guidelines, and that sort of thing, as defined in our Minnesota Department of Agriculture. The insurance cost for a market is $110.
All right, thank you very much, Bill.
All right, I hope that was helpful.
Oh, I'm sorry, go ahead. I didn't mean to cut you off.
No, that's fine. Thank you.
Thank you.
Hey, Peter, this is Jeff. I neglected to make it clear that the mass policy is available to markets only. It is not a vendor policy, and although we are asked frequently, the insurance company has made it very clear that they have no interest in providing coverage to individual vendors.
Right, a different risk. Thank you, and thank you for that clarification. And Melissa, Jeff, and Bill, and I'd like to, on behalf of the Farmers Market Coalition, I'd like to thank all three of you, and I would also like to thank Drew Love, who has worked quite tirelessly for months and months to put these together, coordinate schedules, and he has done so with patience and grace. So thank you, Drew.
Thank you, Peter.
We will now spend questions, and I only see one question up there, but let me ask. I think this is probably for Jeff, but Nathan asked, was he correct in hearing that the FMC base rate for D&O insurance for a not-for-profit market is $1,500?
No, the $1,500 is the base rate for a not-for-profit.
Oh, I'm sorry. That was okay. So the base rate for not-for-profit.
Right. But if it's a charitable organization,
okay,
a C3 organization, my best understanding is it's $350 base rate.
Okay. So the base rate for not-for-profit is $1,500.
Correct.
And for charitable,
$350.
Okay.
And that's through your program, correct?
That's correct. Yes.
Right.
Okay. And do we have other questions? While we wait, I wanted to just mention two things quickly. I think Jeff had mentioned the importance of the possibility of liquor liability. That is often, many policies routinely exclude liability from liquor. That kind of coverage can be purchased as an endorsement, for usually a small extra fee, but it would be important to let your insurance agent or insurance company know if there's the sale of liquor or any of that used, because again, otherwise, without knowing, you may get a policy that excludes it. And then there is also, for general insurance questions, you can both online, largely online, is your state insurance department. But there's also an organization called the National Association of Insurance Commissioners, NAIC, and they have a comprehensive website, including something called Insure You, that's devoted to simply to educating all of us on insurance issues. And that website is www.naic.org. And that is one, and that website will also give you links to every state insurance department in the country. If it's is an easy way to find it. Do we have any other questions? One question is, I missed the other presentations. How do I go about getting a copy of those? Drew, do you know?
Yes, you can find that at the Farmers Market Coalition website. It's just farmersmarketcoalition.org, and they'll be included in our resource library. And so you can find copies of the first 3 slideshows, and then for this one we will have a recorded audio and video section as well. So you'll be able to hear and see everything that you've heard and seen today.
Okay. And do we have any other questions? Let me ask, I think Jeff or anyone had mentioned claims. If anyone thinks it would be useful to talk about it, or without, not going into names or anything, but to talk about a claim as an illustration.
Sure. I mean, at least I can tell folks what the Massachusetts claims history has been, and we started writing this policy maybe as a backdrop back in the mid-'80s. I believe it was '83 or '84, and we actually initially had to work with Lloyd's of London. There was not an insurance company that we could find locally willing to write coverage for in the farmers market. So we went to Lloyd's, we got some experience, and in fact, we ran a couple of years under Lloyd's and had the first claim. It was a $20,000 claim from a woman who walked by a farmer's corn basket, ripped her nylon, scratched her calf, and her lawyer thought that she needed $20,000 to make her feel better. And the insurance company paid that, said it wasn't worth fighting, and then said, we're no longer interested in insuring you any longer. And so we then found local coverage because we had some experience at that point, and we found a local insurance company, our agent, to work with a company, and we ran for a good number of years with that company. And there was a claim, one claim issued about 4 years later, so I believe it was in the very late '80s. And it was as a result of someone slipping and falling on a tomato that had fallen off a vendor's table and was on the pavement, and no one noticed it until this individual fell down. And they again, same scenario. They were, they had a bruised knee and so on, and issued a claim for $30,000, and the insurance company paid it. And at that point, the rates went up pretty significantly, and we went searching, and we found a third provider that we went with. I believe it was in '89, and we've been with this provider ever since.
Okay.
And that has covered one additional claim, and that claim was for $35,000, and that was a claim where a farmer had a 1-inch thick 3x5 sign, farm sign, that was the name of the farm and so on, that just had been propped up on the back of the pickup truck in the corner against a stake pocket. And customer came by, didn't like all of the variety of product that was on the table for sale, and the farmer invited the customer back to the back of the truck to find their own stuff, and sure enough, a big gust of wind came just at the right time, knocked the sign over onto the woman's head, and she was injured, and we ended up paying a claim for $35,000. Now, we actually fought the insurance company, if you will. We had many, many discussions with them saying that this is clearly not a market issue. The market had no control. It was a vendor's property on the vendor's truck with a mistaken action on the by the vendor of inviting the customer into the non-sales area and so on. But the insurance company told us that it just was not worth their time and effort to try to pass this claim off or to litigate it in any way, and so against our objections, they paid it. So that's been our.
No, that's a good example, though. That one of the benefits of insurance is that they pay for the cost of defense, but that in most policies also gives them the right to control the defense and to resolve claims even against your will often, although they should try hard to work with the policyholder. Thank you. We have a couple more questions. One question is, if we proceed to develop an insurance program in South Carolina, is there someone at FMC to assist with this process?
I can take a stab at that, and then Jeff, if you want to jump in too. I know you work with FMC pretty closely. At the moment, FMC there's pretty small staff, so we don't necessarily have people to directly work with you. However, one of the things that we do, I think, quite well, is serve as a resource center for farmers market organizations all across the country. One of those resources is a very active listserv. So I'd highly encourage you, if you are interested in that process, to send an email out through that listserv, because there's quite a few other states that have gone through the same process, and I think you would find quite a lot of help by doing that. Maybe Jeff and Bill, if you would like to jump in on this, but I think typically going through your Department of Agriculture, your state Department of Agriculture, might also be a good first step in securing an insurance policy for your state. Jeff, did you have any comments on that particular question?
Well, it's not likely that the State Department of Agriculture would have a policy, but they may have an expert or someone on their legal staff or whatever who would provide some guidance and assistance. And yes, I will confirm what Drew said, that the capacity of the FMC to actually work with you on a daily basis to create your policy is very, very limited. But the capacity to connect you with others who have done that and who are willing to provide advice is very, very high. That's what FMC is basically set its standards of not trying to recreate wheels and the work of all the farmers market groups across the country, but to serve as a facilitator of communication, of best practices, and so on.
Okay. No, thank you for that. And another question is, I am aware of markets which choose not to purchase market liability insurance because of the belief that having insurance makes them a juicier target for lawsuits. Is this a reasonable stance in your opinions? I'll take the first stab at that quickly and then pass it on. I don't know if it's reasonable or unreasonable. I think it's a potentially dangerous stance. Entities get sued for a lot of reasons, and the fact that people have insurance, I'm not sure there's any, I don't know what evidence, if any, there is, but that makes you more likely to be sued. And maybe the best way to think about it is, would you not have liability insurance for your auto or home other than required by law because you think that makes it more likely that you'd be sued, or do you have the insurance to protect you in the unlikely event that you are sued? So I would not, I think that is a dangerous position for the farmers market to have. But other people?
I agree that's a dangerous thought process, but what I have found is what most attorneys look at is the limit that you have, and they usually don't go over the limit that you may have as a way of determining a settlement or requesting a certain amount. You having the insurance or not doesn't make the claim not occur or the attorney's defense not needed. Sometimes they use your limit as a means to request a certain amount.
That's absolutely true. There's good research on that. Thank you. Anyone else want to respond on that?
Well, this is Jeff. Our experience has been that, as both of you said, the risk is still there. The only way that I can see it might impact what happens is that if you have insurance, a lawyer may say, it's a minor injury, but we've looked at the history of this insurance company, we've looked at the history of these types of claims, and if I write a letter for asking for $20,000, they're going to pay it, and you're going to get some money, and I'm going to get some money, and we're both going to be happy. forward. And so that type of claim may be incented if you have coverage versus don't have coverage. But if there's any kind of real significant injury, and is that there will be a claim filed, and now you're in big trouble if you don't have coverage.
Right. Thank you. Bill, did you have any other comments you wanted to make on that?
Well, in most of our local markets here, the board of directors for the local market will insist that each vendor have a liability policy that extends their responsibilities off the farm for off-the-farm sales. So that's basically what we were trying to get into, to get a lower rate, because a lot of the insurance companies that are homeowner insurance and farm insurance people, they were not, some of them were not willing to cover any sales off the farm, and they wanted to write a separate policy for that. And those policies are running $300 for these people.
Well, that's an excellent point. Typically, at least your standard homeowners policy will not cover any of these risks that we've been talking about, whether that occur either for the vendor or for the farmers market. They're considered a business even if it's a nonprofit.
I sure would want to serve on a board as an executive officer without that organization having any type of insurance. You know, personally, I think that would be a scary venture.
It's becoming very common for nonprofits, or even nonprofits, I think that's right, to have D&O insurance, as we talked about earlier, just for that reason. Another question we have is, some of the markets are owned by cities or counties. How does this impact insurance issues?
Most insurance policies for cities or counties assume that or have a line item in for those type of events, or more importantly, don't exclude those type of events. So if it's a municipality involved with the functioning of the event, it's usually not an issue. No special insurance needs to be provided. Now, again, it's something that everyone needs to look at their policy and make sure there's no exclusions out there for that type of event. But it's not unusual for that to be just automatically covered if the city or county is sponsoring the event.
Okay. And in many states, there's some limited immunity for government entities when they engage in practices. But what that immunity is can really vary very much by state and very much by facts, and whether it includes, would cover a farmer's market on government land, it again would vary. So I certainly wouldn't assume it does. But that's, I would check that out. I always want to play it safe, I think, on these issues.
Yeah, I would talk to your insurance agent for that municipality's insurance program and determine if it's covered by insurance, and also look at your chapter law, see what's out there to protect you.
Another question, how does the FMC D&O insurance compare to other D&O insurance plans for similar organizations, such as a seasonal retail business? And I assume by that the question means is premiums. How much does it cost? So how does the FMC D&O insurance company compare to other D&O plans for similar businesses? I don't know if Melissa, I don't know if that's.
Well, each state would be different. It depends on what state you are and what insurance markets are out there for you to go to. In Iowa, for instance, the minimum premium for a nonprofit organization could start as low as $300 and range from $300 to $750. But there are instances where, depending on how much assets they have, number of employees, what that organization is doing, it could go up into the thousands of dollars. But on a general, between $300 and $700 is usually a basic profit.
Okay. And it is after 2. Drew, there's a couple more questions. Do we have time, or should we just see if these can be answered offline?
As long as we have time and the rest of the panelists are okay, I say we go ahead and answer them. If anybody does have to leave, just let me know. If any of our attendees have to leave, though, you will see a pop-up screen that will come on your computer once you exit. A very short survey about the webinar, and I highly encourage you to fill that out. It really helps us out, gives us some pretty good information about how effective you found the series to be. And if you did find the series to be effective, you found the information to be helpful, I strongly encourage you to check out our website, farmersmarketcoalition.org. You can also find out more information about how to be a member and to get advance notice about other webinars in the future, as well as a few other benefits. But after that, I think we can answer a few more questions as long as the other panelists do have time.
Thank you. One quick question. Does the first, and this is really for you, Drew, does the first insurance presentation have a recorded audio?
The first three presentations do not have recorded audio, but this one should have recorded audio. That was just due to some earlier IT problems that we encountered.
Okay, so only the fourth one, this one.
Right, that is correct.
Okay, and then another question is, this is very specific. I don't know if anyone knows. Does the new Indiana House Bill 1133 that limits liability in the parts of agritourism venues, such as farmers markets, does that mean that markets won't need this type of insurance now? I don't. If no one's familiar with the bill, I'm certainly not.
I'm not familiar with the bill in Indiana.
Yeah, I would recommend on this that the person, I think this is Laura, it's a good question. A couple places to go would be your state insurance commissioner. You could ask a state representative about the bill. In my experience, most bills that limit liability do just that. They might limit it. Rarely do they exclude it. So that could mean, I don't know if that would mean that you wouldn't need insurance, but that the cost of insurance could possibly be less because the liability is less. But that's just a guess.
And usually, even if a state has passed some new legislation, it takes a while for the insurance companies to respond to that legislation. So you have to keep that in mind. It might have an impact on the premium, but it might take some while for that to happen.
Okay. That's a good point. And then the last question I have, would 501c4 not-for-profits be the higher rate? This gets back, I think, to the first question we answered. And so Jeff, I guess this is for you, would 501c4 not-for-profits be the higher premium, I think, for D&O insurance?
Yes, in terms of the FMC collaborative D&O insurance, it would be. And in fact, I have been able to finally get the most updated premium rates, and so I'll briefly go through them now. And there'll be links on the FMC website to this information. If the C3's annual gross revenue was from 0 to 50,000, it's $382 per year plus a $20 admin charge. All of these will have a $20 admin charge added. If it's between and that's with a $1,000 deductible and a $500,000 limit. If you want to get to $1 million limit, also with a $1,000 deductible, it's $466. If the gross revenues are between $50,000 and $100,000, the $500,000 limit is at $563, and the $1 million limit is at $659. And then anything above that in terms of gross revenue will be rated upon completing the application.
Okay. And thank you, Jeff. And that's all the questions I have. But I'm sorry, I didn't mean to cut someone off.
And Bill, this is Bill. Jeff, we were talking about gross revenues. That's not all the sales at a market. That's just the money that rolls through the market management.
That's correct.
Okay.
I don't see any other questions. So again, I'd like to very much thank Melissa, Jeff, Bill, and then Drew Love and Stacy Miller for all their help. And Drew, do you want to wrap it up, or do you have with that slide?
Yeah, just a final thank you to all the panelists that contributed today: Peter, Melissa, Bill, and Jeff. And thank you so much for being a part of this. Thank you to everyone who attended today. And we will have this webinar series with the audio probably on our website by the end of the week at the latest, where you can find our other webinar series as well. So thank you again, and I hope you have a good rest of the day.
Thank you, everyone.
Thank
Goodbye.
you.